Today we will talk about two particular models in which mutual fund is sold. One model is direct plans. The second model is regular plans. I am sure a lot of people are aware of this. But what is direct plan? When did it come? How does it evolve? That hardly anybody knows about it. Direct plan in mutual funds were introduced in the year 2013. Until then, there were only regular plans. Why this particular need came? This particular need came because a lot of corporates who were putting in a lot of money, the big chunks, they were actually going through middlemen. SEBI realized that why should this institutional investors bear the brunt? Because they do have their research team in place, they do have the people who are in execution, they have the people who can make informed decision. Then what is the use of a distribution in this particular thing? So direct plans were introduced in order to save on the costs that the corporates were bearing on mutual funds. Until 2019, this particular thing started getting some traction. In 2016-17, there were a lot of platforms who came into existence and they popularized direct plan investing. Still, the traction until COVID was relatively low. But after COVID, this particular way of investing exploded like anything. In India, still there are a lot of people who are preferring to invest into direct plans. That means they are not going through any middlemen in between. However, the point to note over here is that direct plan were introduced for people who were having big amount of money, because a commission of say 1% makes a huge difference in terms of the returns that the investor is getting on the corpus. However, what we have seen in last 4 to 5 years is that retail person who is wanting to start an SIP of say 1000 rupees or 2000 rupees, he is still preferring to go direct. The idea is they are not wrong. Ultimately, everybody looks at the cost upfront, what is being paid. But then the point to understand over here is that for whom the direct plans make sense. Direct plan makes sense for people who understand the domain, because unless and until you understand, you will be more prone to getting into a trap of getting schemes which probably are coming in front of you through influencers, through social media, or maybe through articles. However, the cost that is involved between a direct plan and regular plan is significantly high. Initially, the difference might look very small, but over the period of time, as the money grows, that difference also compounds. So, direct plans is particularly better for people who have sufficient knowledge, people who can take their investment decisions on their own basis, their own objectives, and yes, are looking forward to get maximum out of it by saving on to the cost. Here, you are directly dealing with the manufacturers. There is no middleman in between. So, before you invest into direct plan, understand what is your goal and what is the present quantum of knowledge that you have about the product. Because to deep dive into investment product just for the sake of saving 1% kind of commission might cost you a lot in returns if the product that you have chosen is not as per your expectations or as per your objective.